Greetings in the name of Yahuwah and His Son Yahushua Mashiach. My name is Malak Shalomo. Today is the 18th of September 2024. It's 7:52 a.m. Eastern Time, and I'm gonna just do a little technical analysis. Today is the FOMC Fed rates. Big news today. So I'm just gonna do a little technical analysis in preparation for the day ahead. So far this week I haven't traded. I think it's prudent not to trade this week. A lot of these gurus and stuff on YouTube have been suggesting not to trade this week because we have what's it called? The options expiration on Friday. We have the Fed's funds rate today, and it's just uncertainty in the market, right? So it's best to not trade this week. So I haven't traded so far. I'm kind of anxious to trade though, like being not trading for like 2 days and just watching the market. You kind of build up this anxiousness to actually make some trades. So yesterday I was looking at the market and there was some opportunities, but I still stayed out. So practicing some discipline, and discipline is kind of the core of being a consistent trader, consistently profitable trader. So just trying to practice that. So today, after the Fed funds rate is announced, let's see, this is going on until we have let's see, let me just point that out. Let me change that color. Right, so at 2:30 p.m. we have the FOMC conference, right, the press conference. So this is probably going to run for like an hour, I guess. So this is like an all-day situation from 2 p.m. to the market close. And I guess the market will be, I don't know, maybe it might be a little stagnant in approaching this. So not sure if I'm going to take any trades today. We do have some news coming out today in the morning at 8:30 a.m. We have the building permits and housing starts. So the forecast for that right now is 1.41 million, 1.31 million, right? So this is suggesting that the building permits and the housing starts is going to increase. So if that's increasing, that means that's added spending, right? Because they're going to get loans to actually start these construction projects, right? So if this is forecast to start, that means that that'll be added spending, which would be an increase in inflation, right? So if there's more spending, there's more inflation. That's what they're forecasting right there, that it's more spending. Now, the Feds is kind of forecasted, or people's sentiment is that they're gonna lower interest rates. So I don't know how that's gonna work out. If this stuff is forecast to rise, then I don't know why they would raise interest rates right now. I don't think that's a good idea, but maybe they're setting us up for a crash, right? Because what's the debt right now? I think it's like 35 trillion or something like that. And lowering the interest rates will only increase that, because you're gonna make money more affordable, right? So when you make loans more affordable, people are gonna borrow and they're gonna spend. So that's gonna increase inflation. So I don't know what they're up to, man. So it's up to them. But others have a certain opinion about the economy that I guess they believe in the monopoly money kind of effect, right? So once they print more money and everybody's happy, everything will just be fine. So I don't really think that's the case, but to each his own. All right, so that's what we have on the news forecast today. And let's see, we're gonna move over to the bond market. Right, so this is iShares National Muni Bond ETF. So it's basically municipal bonds, state bonds. So this is a more accurate or less diluted or corrupted kind of bond market, right? So Right here, we're teetering at the all-time high. I think we broke the all-time high here. So let's see. This is the high of 108.64. Over here was 108.65. So we haven't broken the high yet. We're just up here at the high. This is kind of similar to where the ES is right now, the S&P 500. So um, actually, the bond market is a little higher right now. Right, so let's open that up a little bit and move you across here. Right. Right. So looking at this candle yesterday, we had basically like a little doji candle right there, not too much movement. The prior candle to that was a big buy off of Camarilla R4. That's the monthly Camarilla R4 at 108.43, right? So significantly bullish. We're above Camarilla R4. Next up here is Camarilla R5 at 108.87. That's that blue line right there, right? So looking good on the bonds side of things. So let's say we're thinking about bonds as these are loans, right? These are debts. These are selling debts, right? So I guess people are buying debts a lot, right? So that's how I look at the bond market. I think that's correct though. You know what I mean? So the bonds is basically loans, right? So when you buy a bond, you're buying a debt, right? So people are buying these debts right now. This is US debts. So people are still buying it, right? So good luck to them on that bit. Let's see. Let's switch this over to the daily, right? So this is the 10-year yield, right? So the 10-year yield on the daily is kind of in a reversal pattern here. We're below Camarilla S4, which is at, let's see, 3.1, 3.687%, or I think that's it, 3.688%. Let me open that up a little bit. Right, so you could see here, that's the number right there. So 3.688% is Camarilla S4. And we're getting some reversal here off of this low. The low is 3.599%, right? So yields are rising right now. The bonds is rising at the same time, so that's kind of tricky. You know, I mean, somebody has to go the opposite direction, but basically right now, it's moving in correlation as it should. The yields are going down while the bonds prices is getting higher, right? So right now, this is doing a little reversal. So if this starts pushing up, that means that bonds is supposed to start breaking down, right? So this is a long-term bond as well. This is a 10-year bond, so this is a further outlook on the market basically, right? So this is looking like it's going to reverse. Maybe bonds will start taking a hit. People will sell bonds. Not sure. So let's go over to this is the 5-year yield, right? Same kind of structure, same reversal pattern in play right now. Um, Previous selling off, and now we're getting some support here, and that's kind of in correlation with what this is moving a little. It's progressing more on the reversal side compared to the bond market actually teetering at the top here, because the bonds haven't reversed yet, right? So if the yields are moving up, the bonds are supposed to be moving down. So it hasn't really moved down as yet, right? So that's a little divergence right there. And let's see here. Let's look at the 2-year, right? So this is a closer outlook, only 2 years into the future. So this is their estimation, 2 years into the future. So this is the same kind of reversal pattern. Um, Everything is looking the same on the yields market. There's no real big divergence from the 10-year to the 2-year, right? So same sentiment. All right, let's see. Let's go over here to, let's see if I want to look at anything here. All right, let's see. Thomson Reuters commodities, right? So this is basically an index of all commodities, right? So let's see here. Basically, let me take this off for a second. Let's take off the market profile, kind of clouding up stuff here. All right. So right, basically we're at this level here at 278.6393, right? And you can see here there's no real candles, no real movement right now. Previously they had a bunch of candles here, and this isn't really moving right now at all, right? So it's kind of in a creating a higher low right now, right? And we're pushing off of that. So it's looking like commodities are pushing to the upside, right? So in this case here, if commodities is moving to the upside, that means that prices are getting higher on commodities. And wouldn't that be a sign of inflation not cooling, right? So let's say here, for instance, right? If commodities are going down, that means that inflation is cooling. If it's going up, higher prices, that's supposed to mean inflation is rising, right? So if it's coming down, inflation is going down, right? Now where the trajectory is to the upside. Maybe it'll just test here and pull back, but to me, this is looking like higher prices incoming, right? So we had a pullback off of here, the prices here at this white line. So who knows what it's going to do from here, if commodities are going to start moving down or moving up. So that's anyone's guess right now. To me, it's looking like it's in a reversal pattern, but maybe because of this pullback here, the Feds is like, all right, things is looking good. Maybe we could lower some interest rates. So who knows what the big boys are thinking, right? Let's see here. All right. So here we have gold, but I think I'm gonna get to gold later on as I move down into these charts. Um, we have steel here. Steel is at a base level here, looking like it might catch a little reversal. We had a prior consolidation last month and then a pop-up. So we're back down here testing these lows here. Steel is now currently at 150.57, right? Looking like it's gonna kind of retrace this candle right here to the downside. So I guess if steel is cheaper, it'll be better for these construction projects. If they could get cheaper steel, that'll be good for them. So whatever that means. Let's see here. What else? What else? Copper. Let's check out copper. Right. So copper is a gauge for an active economy as well. So when there's construction projects, there's a lot of copper used as well as steel, right? So copper is still pushing up to the upside, right? We have this consolidation right here, and we're looking like we want to break out to the upside, right? And this is a 1 hour chart. Let me go over to the daily, right? So yeah, we're looking like we accumulated here, and now we're gonna break out to the top. This is monthly Camaria R4 here, that red line. So it's looking like we push into the upside, right? Yeah, it's looking bullish, and it could easily go the other way as well, because you see we had this prior candle sell off right here at this level. So let's see if this is gonna continue to the upside. So that'll be a risk on indicator if copper keeps going to the upside, right? So right now that's looking bullish. That's bullish for the market. Let's see here. Oil, don't want to really check that right now. There's okay, let's check wheat. Right, so go to the daily chart. Right, so wheat is also looking like it's in a reversal pattern, looking like it wants to head to the upside. We had this engulfing candle come back down here after this bullish move. It's looking like it's going to recover and just head to the upside. If it fails here at this level at 584.6, then we could probably get a retracement and a breakdown here back to Camarilla R3, monthly Camarilla R3 at 56.6.2, right? So this is looking bullish as well. See here, we have wheat and then we have, let's see, let's check out lumber real quick. Move to the daily, right? This is also a construction indicator. If there's construction, that means there's a healthy economy, meaning there's a lot of money available to do construction projects, right? So lumber came back here, creating a little accumulation, looking like it wants to break out to the high right there. So not copper, lumber is looking bullish, but it's in a downtrend, right? So it's really cheap right now, but looking like it wants to start retracing to the up or reversing to the upside. So let's see if it could break out from this level here. R1 monthly, R1 is at 520, right? So you know what? I'm gonna just set some alerts. I should have set some alerts over there at steel as well. So let's go back to steel. Alright, so steel needs an alert here at 150.85, and I'm gonna set one here at this base at 149.97. Right. So just so I could be aware of where it's headed. Let's see here on wheat. Alright, let's put one here at the central pivot, 584.4, and the base of this candle right here. All right, just to get an indicator of where it's headed. All right, let's see lumber and soybeans. Let's go to soybeans. And all of this stuff here is kind of an indicator of whether inflation is going to be a factor or not, right? So if these things are getting more expensive, then prices will rise, and that's a sign of inflation, right? So that's why I'm looking at this. Right, so I'm gonna set this here on soybeans, set this at Camarilla R3. If we break above, you see it's in a bullish posture right now, in a reversal posture. And I'm gonna set an alert here at 1017.0 as well. See if this candle is pulling back. I'm gonna set one here as well at this level here, 1012.0. Right. Right, so most of these commodities are looking like they're in a reversal pattern and looking like they want to get stronger, right? If we do lower rates, these prices may start pushing up as well because there's going to be more money available for people to buy more wheat, more steel, more copper. So these prices will rise as more people buy them, right? So let's go over to the US dollar. Check out where the money is at. Let's see. So the money is low, right? It's at the lows. I think the Feds like that, right? So they like cheap money. They like to keep the US dollar at lows. They don't like it to be strong. When it's strong, it kind of I guess it kind of puts strain on the economy. So the dollar has been pulling back a lot. I think if they lower rates, that's gonna cause the US dollar to drop even further because it's gonna be it's gonna be easily accessible to get the money. So if someone is buying the money, it's not good. It's like losing value, right? So if some foreign companies or foreign currencies or foreign countries are buying the US dollar, this is a loss to them, right? If they're holding US dollars, then the dollar is getting weaker and they're losing money basically, right? So if this Fed funds rate is cut or the basis points is dropped, then that is gonna probably cause the US dollar to go down further. It was looking for at a point in time I was looking at it like it's gonna reverse, but right now it's looking really weak coming back down here. This was a poor answer to this sell-off candle right here, back down to the base. We didn't even engulf that candle or come back up to the highs, and now we're getting this rejection here off of this first lower deviation off of the monthly VWAP, and now we're pushing down to Camaria S4. We got a little bounce at Camaria S4 at 12,704. And just to point this out for you, this is the Dow Jones FXCM dollar index. This isn't the Dixie. This is a more comprehensive, properly weighted version of the US dollar against other currencies, right? The Dixie is an outdated weighting from other currencies against the US dollar. So if you want to check this out, this is Dow Jones FXCM dollar index, and you can do some research on why I'm using this other than the Dixie, right? So you can check that out. Let me see, go over here. You can see the ticker right here, right? So if you want to check it out, you can check it out. All right, so US dollar looking weak. Fed's about to drop the basis points. This could probably get weaker. We could head down to monthly floor pivot S1 at 12,634. All right, let's see here. Let's look at the daily chart on GBP USD, and I'll run through some of these currencies, the US dollar pairs. Let me go over here to currency pairs. Right. Let's start off with USD JPY. Right, so the US dollar is weak against the yen. The yen is strong at this point, and the US dollar is losing a lot of ground against the yen. Right, so we're at this base right here. We even hit monthly Camaria S4 at 141.147. We're getting a little bounce there, but it's looking like it's going to be short-lived, right? It's looking like that's going to come back down, and we're going to test. We almost tested floor pivot S1, the monthly floor pivot S1 at 139.387. So it's looking like it's shaping up to continue lower. So if they lower the interest rates, they drop these basis points and all that, this is probably going to come down lower. The yen is probably going to continue on its highs, right? And I think I don't think I loaded up this. Let me just check. Make sure I put this on here. Right, so we're going to get to the yen chart as well. Right, so USD JPY looking like it's going to continue further down. Euro USD. All right, this is up at the highs right now, showing a little weakness right here. I believe that the euro they dropped their basis points. The European Fed Bank, I think it's called ECB or something like that. So they dropped their interest rates over there. So this could probably start getting weaker against the US dollar, but the US dollar is basically kind of weak right now. You see that I showed you before. It is basically at the bottom right now and not really looking like it's shaping up to do a reversal. So any strength the euro gets is probably gonna keep pushing higher, right? And if we get weakness in the US dollar, further weakness, this is gonna push up from here, right? Probably break these highs and stuff like that. So that's probably a trade kind of sizing up right now. I want to see what's going to happen after this Fed funds rate, and then I could probably start thinking about catching like a breakout and retest for like a euro long, right? Probably same thing, GBP, USD, all of these currencies here are probably gonna push to the upside as the US dollar is getting weaker, right? And it's kind of forecast to get even weaker with these the dropping of these interest rates. So we up here at these highs, GBP USD. The high is 1.32666, and let's see if it's gonna break out. Monthly Camaria R3 is at 1.32918, right? So let's go over to AUD USD. AUD USD is the third time it's coming up to these highs right here. Let's see if it's gonna break out. Same thing. These are risk on currency pairs, and let's see if they're gonna break out. This is a channel high right here. It's a down channel high, so let's see if it's gonna break out of this channel to the upside. Let's see NZD USD. This is also a down channel right here. This is already breaking out to the upside. We have a nice bullish activity right here on this candle. So actually, NZD USD is looking the most bullish right now as a risk on currency pair. So this is looking pretty good. So maybe a retest here of this level at 0.62109, and could probably get a nice entry to get back up to the high here of 0.62992, right? Let's see, go over to the yen chart on the daily. So the yen is pulling back a little bit. I think this is going to be short-lived though. I think the yen is going to find support here. This white line is monthly VWAP, right? So I think it's going to find support there. We're getting the rejection off of this quarterly first upper deviation, right? So, but I think we're going to get support at VWAP though, right? So I'll be looking out for some continuation to the upside. That'll be a good signal here for the USD JPY to catch a short on that as the US dollar starts breaking down, and this catches the retest push to the upside from here, right? Because I'm expecting probably buyers are going to be here supporting that VWAP, right? So let's see here where we're going from here. SPX. Guess we could just look at the SPY. Alright, so SPY daily chart broke out of the highs. I don't think the ES is the same, but the SPY broke out of the highs. We have this retracement pulling back. It's basically a breakout and retest right now. And this is the bullish target. The monthly R1 is 577.68. Is coupled with Camaria R3 at 578.51. So possibly a continuation here, a little small breakout, retest, and go, right? Because I guess if they lower the rates, then we'll get this bullish move right here. All right, let's see QQQ. All right, so QQQ not looking too good though, right? So if we do get like a bearish reaction to this Fed funds rate today, this is sizing up to be a short here. Let's see. Right, so that's basically testing that trend line right there. Let's see, make that here. Yeah. So it's basically, this is a downtrend line here, resistance line. It's not really looking like it tried to push above that a little bit. So any sign of weakness, I guess the Qs is going to be the first one to break down, right? In comparison to the SPY. So the SPY broke out, but the Qs are way below the highs right here. So the Qs is at 473.75 in the pre-market. The high is at 503.52. So This is looking kind of weak though, right? So let's see what's happening here. When the Fed's fund rate is released, let's see if it gets that bullish push to the upside, and then it can get back to the highs, right? Oh, and this is like a real comprehensive VIX chart that I found from this guy here. Let me go over to this so I could kind of see. I just subscribed to him, so it should be somewhere here. Um, let me see. Let me see if I could remember his name. Ah, yeah, it's popping up. Right, so this guy here has some indicators that he developed with using tick charts and V not VWAPs, VIX charts and different VIX charts, and you can see here he's trade entry and exit confirmation using tick. So he developed the software here that kind of shows these different options and VIX and all these kind of different levels here. So I was looking at one of the videos and it was really interesting. So shout out to this guy here if you want to check him out, right? And he gave me the idea here to kind of build these different VIX charts, right? So this is the VIX, regular VIX. This here that's the ticker right there, is VIX 9D, right? So you can see is CBOE S&P 500 9-day volatility index, right? And then we have this is another one. This is the core 90D, right? This is CBOE 3-month 90 delta CBOE implied correlation index, right? So all these things you could probably research on your own what it means. And let's see here. This is the VIVIX, right? So this is CBOE VIX volatility index, right? And then we have UVIX, which is the VSTR 2 times long VIX futures ETF, right, for NYSE. So all of these things here are these are basically indexes of the VIX itself in different like different time frames. This is a 9-day volatility index. This is a 90-day implied index correlation. So all of these things I'm gonna watch during the day, because you gotta watch this guy's video and see how that affects price and how you could kind of gauge these movements in these instruments against risk on or risk off activity, right? So, but the main one is always the VIX, right? But these others kind of gauge the volatility of the VIX itself, right? So if you want to check these out, check out these tickers and you can build one of these charts as well, right? I also got this idea from him as well. This is the tick Q, right? Nasdaq combined tick, and this is the regular tick, right? Now is the cumulative tick, right? So I have these two tick charts, and then these are the same VIX charts that I showed before, but this is the 90 delta and this is the 9-day, right? So I built this one here as well, gauge sentiment in the market. If we're pushing above and want to take a long trade in these ticks, it's a good idea. If it's down here or just breaking and pushing to the downside, probably a long would be a bad idea. And again, this is not trading advice. I'm not qualified to do that. This is just my opinion. And I got these ideas from this guy here. So check out these videos from this guy. And I also this is where I actually saw his video, right? So you can see his video is here from Ninja Trader.
We see that we have this big pullback and we're now trading through the moving averages and into the support zone. So all of that, um, go and show that what happened.
Right. So he's developed this for Ninja Trader. You can see is the VIX 9D, the VIX here, the Core 90D, and the VIVIX, right? So he has this whole setup here and a strategy that he's developed off of this, right? So you can go check out Ninja Trader and also his channel, right? All right. So where we're at right now. All right, let's go to the ES. And this is my messy pivot chart. So, you know, let me just break down what's going on here. Right. So there's a lot on this chart, but basically we're just looking at this, right? Looking at this wick right here. It's looking like impending selling weakness coming in the market here. Previously we had this big sell-off. Possibly could break out to the upside. This is floor pivot R1 right here at 5806. So that's a bullish target for the month. We're not very far away from that. Could possibly get there. Actually, wait, hold on. I didn't make this adjustment here. I think when the contracts flipped, so these levels kind of moved, right? So my bad there. Floor pivot R1 on the monthly is now at 5867.5 and Camaria R3 monthly is at 5873.23, right? So that's where it's at right now. That's the bullish target. If we do break above these highs here, what's the high at 5750? So we got to break above this high right here. This is going to create a uptrust right here. I'm thinking we create some kind of uptrust and then pull back in, but this market is forever bullish, so don't quote me on that. I'm just a skeptic, you know what I'm saying? So this market keeps going up and up and up. So I just have I guess a little conspiracy theory kind of vibe in me where I know that this kind of monopoly money kind of vibe is not really sustainable. It's like a big bubble, but it doesn't have to burst anytime soon. You know what I mean? So free money, monopoly money, print money, let the market keep going up and it's all good. You know what I mean? So possibly getting these interest rates dropped, possibly going to break to the upside. By the end of the month, we could get up to 5867.50 floor pivot R1. And if not, we just retrace back into this whole minutia right here, this whole, range basically of it'll be a big range if we just start reversing from here and come back down to the lows. It'll just be I guess it'll be confirmation of a range in market at that point in time, right? I don't think anyone is really looking out for that right now. I think they're looking for bullish reversal, um, creating a higher low right here, and then we push to the upside, right? So big bulls, man, big bulls. You know what I'm saying? So let's see how that goes. And that's basically let me just drop down to the 1 hour chart, see what we're doing overnight here. So for the overnight session so far, just sideways movement. London didn't really do anything crazy. Let's see, this was the beginning of the London candle. They actually sold right here. So London kind of sold, pushed it down. Maybe they wanted to get some better prices, then they brought it back up. Retested here again, then they're pushing back up. So I don't know what they're up to. Maybe they're trying to get some better prices in anticipation for a bullish move, right? So that's what it looks like to me. Pushing down price to try and get better prices here, accumulate at these lows, and in anticipation for the bullish move, they already positioned really nicely, right? And that's my little analysis so far for the market. Let's see. On the daily levels, Camaria R3 is at 57.16. Yeah, 57.16.50. Um, let's see, we only got up to a high here, overnight high of 57.11. So we're building a base here, right? And could possibly push up to Camaria R3. Now, the Camarias are set up in a outside day relationship, meaning that this has pushed up from this prior level and Camaria S3 has pushed down. This is indicative of like a range in market because it's wider pivot levels, support and resistance. So it could possibly range between these levels, but it's looking like more on the bullish side, and the fundamentals is kind of leading to bullishness. Camaria R4 is up here at, let's see where it's at 57.32. So bullishness, looking out for break of Camaria R3 up to Camaria R4, 57.32.75, or let's say roughly 57.33. All right, y'all. So that's my little breakdown. How long was that? That was 40 minutes. So I hope it wasn't 40 minutes of pain if you listen to this whole thing. That was just my little ideas and stuff like that. And again, it's just my opinion, not trading advice. So don't quote me on anything here. Do your own research and come up with your own trading plan. All right, y'all. So it's Malak Shalomo. Y'all trade safe and stay blessed.